So today I'm going to be talking about arguably the biggest breakthrough that I had as a trader and ultimately what I truly believe got me consistent and profitability within the markets. Now, this is going to be a 4-step process to show you exactly where and why you're going wrong with your trading, because this isn't just something that, worked for me. This is something that I done that worked well, but also I've pushed it onto pretty much any Rise member. It's almost a non-negotiable, if you will. And I've seen many traders break through with this process. So I thought, you know what? Let me make a video. Hopefully it's super helpful for you guys and you can go away and start implementing it. So like I said, it's a 4-step process. Before I start explaining these steps, I'm going to assume that you have a good technical background of your strategy. Why that's important is you need to know technically what a high quality setup is. So a high quality setup should be something that when you see it in the markets, you want to take every single time. It plays your strategy's edge perfectly and it fits it well in terms of your plan. So we have high quality setup number 1, high quality setup number 2. Now, this gap in between these two here, this is what I like to call the consistency killer. This is where you'll see greed pop in. This is where you'll see FOMO creep in. This is where you'll see a lack of patience. This is where people will get lazy, fall out of routine. Just a lot of those mistakes that ultimately keep a trader at break even or keeping those inconsistent returns rolling in. A lot of the time, they understand what a good technical setup is, yet they don't know how or why to apply the patience in order to wait for that next good high quality setup. Because I think everyone understands from a very common sense perspective that less is more within trading. You don't need to take more trades to make more money. Ultimately, what is going to get a lot of you consistent is avoiding mistakes. Now, if you're newer in your journey, break even, inconsistent, it doesn't matter. You need to be eliminating mistakes. There's no point pouring more water into the bucket if it's got a big damn hole at the bottom and you're just funneling profits out of that every single month after month after month, okay? So we want to develop this routine and this process in order to figure out why are we continually making the same mistakes and keeping those same inconsistent returns rolling in. So let's start. Now, step number 1 is a daily watch list and it has to be tracked. This can be done through Notion, Bear, notes, journaling software, whatever you want. You can use whatever you wish, okay? But what you need to include in this is screenshots. You need to include the pair, the date, what you're looking at, and how you're planning to enter this position. This is very, very crucial because we want to gather data when the position is very far away from actually taking place. What this is going to be doing is, we're analyzing this in a very cool, calm, and very, neutral state of mind when it comes to the position and no emotions creeping in just yet. So essentially, screenshot, and I've got this information, back from 2016, all the way to now. This is what I do every single day, every single time I have a pair on watch. Now, that's step number 1. Step number 2 is a pre-trade checklist or a pre-trade documentation of that particular position. So again, you should be seeing something on Daily Watch. Now it's almost time to take that position. Boom. We grab some more screenshots. We write a quick summary of what we like about the position, the pros and cons, the negative and positive confluence factors, how, you are feeling at the time of entering this position, and your management plan. So we have a daily watch list and we have a pre-trade. Now we're moving on to the 3rd step, which is a post-trade checklist. And same thing as the pre, we're obviously just doing this now once the position has closed out. Now, essentially what we're going to be doing is tracking the exact same things, writing a super quick summary of that position, and then also giving your emotional state of mind and a little quick review of that trade. Now, ideally, you want to be doing this as quickly as you can in terms of when the position closes out, just so those emotions are very raw and, no one's going to see this but yourself. So be honest. That is the biggest thing. It's okay to be bad at something within trading. You can fix it. And this is exactly what this exercise is for. So now, when we look at step 4, we have a weekly ASR, which is essentially a weekly self-review process. Now, this is where we are going to be looking at every single day that you took a position. We're going to be lining up with that daily watch list. What was your thoughts? What was your process? How was your mindset at that time? Okay, now the position has shaped up. What type of language did you use? What was the difference here? Did you stick to your original daily watch list plan or process? And then in the post position, How did that come full circle? Did you, identify the position well at the start of the day? Did you enter it correctly? Did you manage it correctly? All of these things will be exposed just by how, where you are going off the rails essentially, and why maybe FOMO's creeping in. So hypothetically, right, let's say you have a good setup on pound dollar that you like for this particular day. You've documented it and you've said, if price pulls back to a certain point here, I'm going to go short, and then, that fits my strategy, right? Obviously super basic, but I'm using this hypothetically. And then you can see when you actually did your pre-trade checklist that price didn't quite reach that area there, forms like a little mini double top, if you will. And then you thought, oh, it's going to go without me. I'm just going to get in here. And then ultimately, price moved up to originally where you wanted. It stopped you out because you had to go a smaller stop because you entered lower, and then price tagged that original area and continued down in the desired direction, right? What this is going to be doing is essentially figuring out where in the realm of identifying a setup before you take the setup, managing the setup, and after you take the setup, where in these 4 areas are you making the mistake? Because a mistake is being made somewhere if you're inconsistent. Now, it doesn't always have to be, as blatant as that. It can be multiple different emotional cycles. It can be a lack of technical skill. It can be so many different things. But the plan to do this, right, and you collecting that data, after you get a couple of months of this, it is going to be evidently clear what you need to work on. Because let's face it, most of the traders that I know that are kind of stuck in that break-even dance, that inconsistent returns rolling in, is all they think about is, if I take more setups, I'm going to make more money. Maybe I need to learn to refine this strategy. Maybe I need to learn another strategy. Maybe I need to incorporate this. Maybe, if I change my management. When in fact, if they just avoided the mistakes and stuck to the good, high quality setups, they would be consistently profitable. Yes, it might not be to the highest of the strategy's edge, but that's not the main goal that you should be having if you're not consistent. The goal should be getting consistent and then building upon that. And the way that you obtain that consistency is by avoiding mistakes, taking good quality positions, gaining confidence. Having smooth and calm equity curves is so crucial for a trader's development and overall just obtaining consistency. So again, to go full circle, step 1, tracking a daily watch list process. Step 2, a pre-trade checklist. Step 3, a post-trade checklist. And then step 4, a weekly review. And you literally rinse and repeat this cycle every single day, every single week, every single month. So at the end of every month, you review the 4 weeks and you just keep stacking it upon itself. Now, like I said, the goal for this type of video, okay, is to help traders who are struggling with a certain area. Now, the problem is, if you are that struggling trader, it is very hard to identify where in the realm of, mindset, technical, routines, process, are you going wrong? Everyone, reads trading books. Maybe they watch people on YouTube and Instagram. You need to apply patience. You need to do this. You need to do that. But ultimately, if you don't know why you're doing those things, it's very hard to implement. So why this, 4-step process is so key is because once you obtain enough data, you will see a mistake that is so obvious and blatant to you. And you'll be like, I need to focus on that. And that is ultimately going to push you towards consistency one step at a time. So like I was saying, for that example before, the hypothetical trade with pound dollar and you entering early, what you would do once you recognize this mistake pop in multiple times is now you are going to build in your pre-trade checklist exactly what you need to do to avoid that mistake. So you would cross-reference it back to the daily watch list, and you would say, you can put key trigger, sentences or check boxes, whatever you want to do in there to be like, has this position pulled back to the desired area of my original analysis? Is this entering early? Am I taking this at a great area of value? And you can just start to piece together this very niche plan specifically to you and making you avoid mistakes that is ultimately going to keep you within the realm of the consistency of your strategy and play that edge correctly. Because if you can play that edge correctly, that is ultimately going to give you the best chance to achieve those consistent results. Now, again, this is a little bit of a band-aid, essentially, if you have a deeper, deep-rooted emotional issue, I should say, and ultimately that will still be exposed. The main goal here is to not fear your mistakes, not fear that you are an inconsistent trader. You should be looking at that in terms of an opportunity and very optimistic outlook so you can identify where you're going wrong, start building a plan to fix it, and then ultimately achieve those desired consistent returns that you want. So I hope you enjoyed today's video. I hope you got some value from it. Like I said, lean into it, guys. Work hard, stay focused, and ultimately, if you put in the right amount of work in the right places and do the correct things so many times, those mistakes will show up and you will eventually be a consistent, profitable trader if you just continue to push through. Thank you so much for watching. I'll see you in the next one. Bye, guys.